Good morning to all market participants and welcome to another Metals and Energies Marketing Science video. Today is August 7th, Wednesday, and we have a very interesting session indeed. Yesterday, following of course Treasury Department's labeling of China as a currency manipulation, yesterday PBOC stepped in and took the prices below the 7 mark for the USD yuan. But the thing is that markets don't really see how that can stop the rally in gold, okay? There is, of course, higher tariffs, okay, on China. There is a lot of tensions between UK and Iran, and recently Iran also seized another oil tanker, Iraqi this time, just yesterday. So although the currency manipulator effect has seen some sort of, is on a standby mode while the rate remains below 7, geopolitical tensions will most likely keep the prices of gold to the upside, to the positive, and that's why, of course, it reached a 6-year high yesterday. Now, on the other side, oil is also dragged down not only by the trade war narrative and rhetoric, but also because raising expectations of a cut in global growth. The truth is that the EIA reported yesterday that it was revising downward its global oil demand for 2019 to 1 million barrels per day. So this is a big step as well for the EIA. Of course, for the day, we've had a very surprising 50 basis cuts from RBNZ. That is dragging the Kiwi and Aussie down as we speak. We are expecting the trade balance from France, Halifax, HPI from the UK, IVPMI, and of course the EIA crude oil stocks later in the session. I want to start with gold one-day chart. It moves exactly as we expected, okay? So in the longer term, we see this as an ABC, okay? Or it could, of course, that could, of course, change, but we still have a long way until that. After breaking outside this triangle, we've had wave 1, wave 2. We are now heading for wave 3. So wave 3 could see prices moving to around, actually anywhere between 1486 and 1572. But to be honest, I'm more leaning towards to the 1566 level, which is the Fibonacci extension of this first wave, okay? Of this first wave over here, 1566. Down on the 4-hour, wave 1, wave 2, so we moved exactly as we expected. Last week we talked about a move up here, okay? And this is exactly what's happened. So following this break over here now, we've reached the Fibonacci extension, fifth Fibonacci extension of this wave 1 to 1486. Next level could be the 1507, or we can just call it the 15 psychological to be more safe, pretty much. Now, silver has a very, very, very huge potential over here. Okay, so we had a corrective complex pattern over here. Prices broke outside this multi-year triangle. Okay, and we have now ended wave 3 of this impulse move, and I'm expecting that to end around wave 5 near the 18 or so. This is the extension, of course, of this wave, okay? The 1 extension and the 1618 extension. Normally, you will see that going up there to around 18, given the Elliott waves. Wave 5 Fibonacci expectations are respected. Down on the 4-hour, we don't see much difference here. We're still looking at this wave, okay? So we have pretty much reached the 261 extension of this minor impulse to the upside, and For here, we could probably see the end of wave 5, the intermediate one, the minor one. So I would be expecting probably a correction very soon. Now, this correction could take us down to this previous support level now, the 1610, or we could even be dragged lower to have a nice retest around the 15 or so level and then shoot all the way to the upside. W2I 1 day exactly as we expected as well. Okay, so we are 1B ABC with wave C expected to be an impulse move to the downside. We've had the first wave, second wave, and we seem to be heading for wave 3. Okay, we want, of course, to break in the medium term below that huge monster support trend line. Down on the 4-hour chart, how is this going? How is this developing? Also, we've got wave 1, wave 2, and we're looking for wave 3. Now, we're looking for this correction, and then, of course, we'll have this A, B, C pattern that could simply turn to be a 1, 2, 3, 4, and 5, and that would complete the longer term wave 3. Of course, considering that we break below the 50.67, which is most likely to be the case, to be honest. Now, the extension of this first move took us down to around 53, right? 100 extensions, 52.33. Most likely we're going to break that level, then break below 50.66 and head lower to 48.52, where this extension will be completed. And then, of course, we'll have another wave here. That will be 1, 2, 3, 4, and then the 2618 will be wave 5. And we're looking at around $45, if not mistaken, or so. So this is all for the day. I want to thank you for watching for another day. I want to remind you, as always, to keep an eye on our blog, is where we'll cover the latest news, provide trading ideas, and all the necessary tools traders need.